This is exactly why you need to buy NIO stock. Retire early with NIO. Why do you need to buy NIO exactly? And why is NIO recommended for the long term instead of adverse macroeconomic issues? What are the NIO stock's big plans and international potential? And why is NIO stock probably heading much higher? Is this the time to buy NIO stock? Hello everyone, welcome back to Stock Market News. Today we're going to talk about why you need to buy NIO stock now. But before we begin, make sure you subscribe to our channel and click on the bell icon so you never miss out on any of our amazing videos. And let's begin! The stock of NIO Inc. has dropped, including the rest of China. In the past few months, the company's stock dropped from its all-time high of about $68 in 2021 to just $12. That is a shocking drop of 82%. Since the selling pressure, the stock has come back, but at about $23, the shares are still a great deal. NIO stock has been hurt by a general lack of interest in Chinese stocks, a recent drop in performance in global stocks, and lockdowns in China related to COVID-19. But because people are too negative, it's a great time to buy NIO stock, and it's not too late. China's relaxing rules about COVID-19, so NIO should be able to keep growing its sales in the biggest global car market. NIO is also expanding to Europe, and by 2025, it plans to be in 25 countries and regions. The company's stock has risen from its recent lows, should stay stable, and will probably keep going up as the company grows in the coming years. As a result of the first quarter's record-breaking deliveries, NIO made a strong statement. After months of extreme decline, NIO stock is now beginning to recover. Even if the company's trading at a discount to its potential, the market's still undervaluing it by about 65% compared to its 52-week high of $55.13. Although the macroeconomic outlook is grim, NIO stock's still a good investment in the long run. At the close of 2018, NIO saw its overall sales increase by 122% year-on-year, reaching $5.67 billion. Quarterly sales of $1.55 billion were driven mostly by healthy demand at home. NIO and its competitors saw a drop in deliveries during the first 2 months of the year as a result of the Chinese New Year. However, the EV Titan made up for lost time in March with record deliveries of 9,985 units. The ES6 was the most common vehicle to be delivered, followed by the EC6 and the ES8. It has also started shipping its latest sedan, the ET7, to customers. With the introduction of the ET7, for which production and shipments will significantly increase this year, the company's sales mix is expected to change as we move forward. NIO finished the first quarter of the year with deliveries of an incredible 25,768 automobiles, which is an increase of 28.5% year-over-year. In addition, the company's results for the first quarter came in at the higher end of the delivery guidance estimates, which range from 25,000 to 26,000 automobiles. In addition, as of the end of March, the total number of deliveries stood at 192,838. This is a staggering figure when one considers the rate at which the number has increased over the course of the last few years. What are NIO's big plans and international potential, which keep our minds peaked towards NIO? NIO has intentions to develop internationally, despite the fact that the majority of the company's revenue comes from China. The company has already established a presence in Norway, where it provides a full charging infrastructure as well as battery switching stations. In addition, NIO is planning to launch its products in the markets of Sweden, Germany, Denmark, and the Netherlands before the year 2022 comes to a close. NIO plans to have a presence in 25 nations and regions across the globe by the year 2025. As a result, it is very possible that NIO will continue increasing sales in China, Europe, and other regions, which will lead to considerable revenue growth over a protracted period of time. The estimated market value of NIO is close to $40 billion. NIO achieved sales of $5.67 billion in 2021, bringing the company's total revenues to approximately $6 billion over the trailing 12-month period. 2022 consensus sales forecasts are for $8.9 billion. As a result, the current price of NIO shares is almost 4.5 times the sales forecast for this year. NIO is currently trading at approximately 2.75 times forward sales. However, if we move forward to 2023 consensus sales, forecasts of $14.54 billion, NIO's valuation significantly lower. Let's also take into account the astounding growth rate that the organization has seen. Despite the challenges brought on by COVID-19, it's anticipated that NIO will produce revenue growth of roughly 57%. The increase in annual revenue should pick up somewhere around 63% the following year. NIO's growth story is astounding, and the price of 2.75 future sales is a pittance to pay for this supercharged growth stock. Despite the possibility that 2024's revenue growth will be between 30 and 40%, NIO's growth has been phenomenal. It appears appears that NIO's revenue is on track to experience significant growth in the years to come. In addition, NIO's price-to-sales ratio is extremely low right now, indicating that the company's stock is undervalued. There are a lot of businesses that have a far slower expansion that trades at PS multiples that are much greater than 2.75 or 5. For example, the current price of Tesla shares is around 7 times forward sales expectations, whereas the current price of Lucid shares is approximately 10 times those estimates. As a result, considering that NIO is in a position to see rapid expansion, my prediction of a multiple of 4 to 5 times ahead sales is considered to be reasonably priced. We should see considerable rises in the firm's market valuation and share price along with the growth in revenue that the company is experiencing. NIO stock might reach $100 by 2025 or even sooner due to the company's distinctive development dynamic and the possibility of future profitability. This would represent a gain of approximately 355% compared to its current price. Additionally, NIO's Battery-as-a-Service program gives it a significant advantage over its rivals, which could be crucial in the current inflationary climate. Potential buyers can save tens of thousands of dollars with BAAS by opting to buy automobiles without batteries and instead pay a subscription fee to swap and charge batteries at NIO swap stations whenever they need to. According to CNEV Post, a website dedicated to covering the rapidly expanding new energy vehicle market in China, as of April 18th, NIO had 864 battery swap stations and 760 supercharging stations. When the possibility of the U.S. delisting Chinese stocks increased in early March, NIO acted swiftly to list its stock in Hong Kong. More crucially, NIO has projected that it can turn a profit in 2024, with profitability expected to begin in the fourth quarter of 2023. NIO appears confident in its abilities while operating in a sector where increasing production while maintaining profitability is challenging. According to Edison Yu, an analyst at Deutsche Bank, who recently issued a comeback plan for the Chinese electric vehicle manufacturer NIO, the stock price of NIO might more than double. Despite the positive tone, NIO suffered a catastrophic day on Tuesday. NIO stock fell by roughly 35% over the past year, but Yu pointed to many reasons that could lead to a rebound. Yu recommends buying shares of NIO and sets a price target of $70. From the current market price of around $32, that's a gain of around 120%. NIO's deliveries surged by over 100% in 2021, but the company's stock price declined as investors fretted regarding delisting and Chinese market oversight regulatory threats, as they did with many other Chinese firms listed in the U.S. Although Yu is aware of the possibility for regulatory issues, he is focused on the fundamentals, with 8 potential stock-moving events outlined by his firm. Even though I have a positive outlook, there are some risks to my thesis. The mess with China could go on, so fears of delisting and other bad things about the CCP could keep putting pressure on NIO's stock price. Also, the company could run into problems with production, and the sales growth I expect might not happen on time. Also, there may be less demand for NIO's vehicles, which would hurt the share price of the company. NIO is still a high-risk investment, but if everything goes right, it could pay off in a big way. And that's going to bring us to the end of today's video. Feel free to let us know what you think about it, and if you like the video, please leave us a like and subscribe to our channel for more great videos like it. Thanks for watching, and we'll see you in our next video. Have a great rest of your day.